Hey Ned, welcome back to the channel. How you doing?
Doing pretty good. How's it going, Radeon?
Pretty good, pretty good. So after our the four pillars of a real estate video, which is why someone would even bother investing in real estate, one might ask, where do they start? How do they pick a market? And I have a little bit of experience with that. I'm sure you do as well, since you're already investing. So I will want to ask you, how did you do it? How did you pick your market? And how would you do it moving forward? And how would you recommend for someone that's brand new to pick a market and start?
So when I picked my first market, I wasn't really looking to invest. I honestly, you've heard my story on house hacking. I wasn't picking a place where I could get the best return. I was like, hey, I like houses in this neighborhood. I can't afford to live there. There's some duplexes. If I live in the duplex, it only costs me like 500 to 800 bucks a month to live in this nice neighborhood.
Yep.
And then I did that, and then I realized, oh wow, I'm getting a better return on this house, and on a monthly basis, getting this rent from effectively my neighbor, and him and I were friends. Well, we became friends, but I was getting a better return on that than all this crazy stuff I was trying to do with my stock portfolio. And um, at the time, I think I was day trading a little bit and focusing on all sorts of crazy, super time consuming things trying to figure out how to get better returns with stocks. And then after about a year of living there, I realized comparing my home and my portfolio, my home obliterated my portfolio by like a huge amount.
Hmm.
And I was like, well, wait a minute. I didn't really try to buy a property that was going to give me a good return. So
Yep.
what would happen if I actually looked at properties as if they were investments? Because I didn't initially. I just bought a house hack because I was like, this will make it cheaper to live,
Yep.
which is weird for a guy who literally works in the finance industry to admit that basically didn't even think about it.
Yep.
Because in the world I'm from, a lot of people just kind of view in the oil and gas and finance industry, houses are just kind of viewed as, oh, yeah, that's where you live. It's not an investment.
Yep.
Or invest, you're going to go on the markets, you're going to look at oil and gas, and it's everyone wants to be technical and complicated, doing all this fancy stuff, and here I am just obliterating those returns, just living living in my house.
Yep.
And my thought was, okay, well, what would happen if I just looked at houses around me and tried to make the returns better?
Yep.
Just be more thoughtful about it. So I started just looking, and I looked at properties around my house for probably 3 months, looking at stuff near me, realized none of it would make any money because I was in kind of a fancy area. And then I said, okay, well, what if I looked at stuff that costs less? And then I saw the numbers were different there. I looked at stuff that had multiple units, started realizing, oh, okay, and went on bigger pockets, started teaching myself. And as I taught myself, I started finding asset classes and housing types, excuse me,
Hmm.
that had cash flow that were in. So I started seeing that all these different neighborhoods perform differently. It's almost like looking at different, each one's
Yep.
almost a different market.
Hmm.
So eventually I picked an area that I was comfortable with, that I could afford to invest in, and that I also felt safe, going out and actually collecting rent and stuff. That's important
Yep.
too.
Yeah, it's
And
important.
so I kind of stumbled into it. It's not very scientific. It's
Hmm.
not complicated, but
Yeah.
you just tried a bunch of things. And over about 6 to 12 months, I found an area and started seeing deals. And then every now and then you see deals that are way better than deals that you normally see. And you're like, okay, well, I want that one.
Yep.
Now it's, it wasn't, it wasn't as well organized and thoughtful as you would think it would be.
Yeah. So you started pretty much in your backyard, right? In your
Yeah,
city where you live in your town.
exactly.
Okay. So how would you do it if, for example, let's say it was unaffordable there for you, or the returns were negative or close to zero? How would you expand? How would you look for another market?
The exact same answer. You just keep looking in your area, at least initially.
Hmm.
If even in the not great areas, or areas that do cash flow you don't feel safe in, maybe you look at close by cities. But for me personally,
Hmm.
even now, the reason I don't invest further away is I have a unit count goal I want to get to, or not really, it's not a unit count. It's more of a net income that I want my portfolio locally to have before I start making one more remote further away. So I want everything to be within like an hour or so drive because
Okay.
I like to be able to drive out there after I get a bill from a contractor saying he did something
Hmm.
and actually make sure it's been done. Now, there's ways around that. If you want to do remote, you can have them send you phone texts with pictures and updates on projects. And like there are ways to
Yep.
monitor things remotely, but I'm personally just not comfortable with that yet. I want to get good at the more hands-on way of doing things so that I can then maybe experiment with long distance type stuff in the future.
Yep. And also, it's good to drive out there because if you guys saw our last video, my last video, and so the video before this one, there's no way to know if your tenants are growing rice paddies in the backyard. So yeah, that's a little inside joke. If you guys wanna hear about that, check out the last video on my channel. But yeah, it's pretty funny, pretty funny. Yeah. So how did I pick this market? Well, I think for me starts initially with learning the skill of real estate investing, or more specifically with learning how to analyze, right, and learning what is a good deal versus a great deal, which is something that Mike Zuber talks a lot about from the channel One Rental at a Time.
But you actually moved to where you invest. Did
Mhm.
you start looking where you were before that?
Well,
Like, I don't.
I've always wanted to. I've always wanted to do real estate. I've always been interested in investing in real estate, but I was always looking, like, for example, so I'm from New York. I was lived there for 20 years, New York City to be more exact, and it's very unaffordable there. There's definitely investors, who are making it work, but it was not affordable for me, and the returns were like most of the time they were negative, and a lot of the time they were just under 5%. And they were very low. So what I did was, well, initially the way I was looking at properties before, learning about One Rental at a Time and Michael Zuber and all that, I was just looking at random towns. Like I was looking at Connecticut one day, and then next day I was looking at Pennsylvania, and then next day I was looking Massachusetts, for, just different towns, see like what the prices are like for properties there, what the rents are, and that's as far as my analyzing went, right? I was just looking at what the rents are and what the prices are. So I wasn't really
And
doing
what
any.
was the problem with looking at all these different markets and not just what you currently do?
Well, because you don't you that way you don't learn what a good deal is, because in some areas you have 10% returns, but that's probably, or it might be that that deal is good for where you're living now, but for that area where you're looking at, it's a mediocre deal, right? Maybe most of
Yeah.
the properties there are have like 20% returns, which which means that it doesn't mean that you shouldn't invest in a property like that, because if the return is like 10% or more, then it's still a good deal. But the point here is that you need to learn the skill of analyzing properties and the skill of real estate investing, right? That's what I consider the skill there for investing in real
What
estate. So, yep.
what led you to your current market and like how long did you look at it before you were like, okay, this is I'm feeling
Uh,
it.
I looked at this market for I would say a couple of months, maybe I would say maybe like 3 months, 3 to 4 months, something like that. Initially, I looked in New York City, and then that wasn't working. And then I looked further out in New York, in an area called Long Island. I'm sure a lot of people know where that is. And there the returns were a little bit better, but this was during 2021, and they were all selling like hotcakes. Like it was every property was getting like 20 offers, and all of them over asking. So I made multiple offers during that time, and I got nothing. No, all rejections. And now to back up a little bit, my long-term plan was to live and move in New Hampshire, but I wanted to invest in New York first, where I was, get a bit of net income, like you said, build that up, and then make the move to New Hampshire. And then I figured since my investing is not going anywhere here where I am in New York, I should just start looking where I want to be in 5 years, right? And then I started looking at a few towns, and I narrowed it down to Keene, New Hampshire, which is where I am now. Started analyzing properties, figured out what the average deal is, and made an offer to the first property, which is how I got to where I am. So I made the move after
Did you and your
after
wife take into
all.
account like schools and all that other stuff, or was the deal kind of the most important part? Like, how did y'all? What was your? How'd you weight those things?
Well, we first visited the state. I actually proposed to my wife while we were here on top of a mountain. We visited a few cities and towns, and then we just based the town on what we like, and the areas. So what's there to do around their nature, the lakes, mountains, the stuff that interests us. And then the investing side or the analyzing property side, I was doing that, before we even made the visits to the different towns, and I pinpointed a few towns that would make sense, and Keene was one of them, where I am now, and
Gotcha.
it all clicked together. So we made the move. We made the
Awesome.
move after we got an offer accepted.
Yeah, I'm actually about to move to Hammond in Louisiana, and so I'm gonna start looking at deals there after I move.
How far is that from your current market?
It's a 55-minute drive, but I think linearly it's only like 44 miles.
Okay, okay.
So I can still maintain my portfolio here.
Mhm.
I mean, all of my stuff's stabilized here, so I can definitely run all this stuff remotely. I just don't know if I'm going to keep expanding my footprint in New Orleans because of the political and legal and insurance issues and stuff like that that the town is having. I don't know if it's getting better or worse overall.
Yep.
It's hard to tell.
Mhm. Okay. All right. So now let's get a scenario going here. So let's assume that our markets just stop having returns. There's nothing to buy. There all the ones that are in the market are very low returns. How would you well, I think you kind of answered that, but I kind of want to bring my answer into it, like how I would pick a new market, or more specifically, pick a market that's out of state, or where it would be that I cannot drive there, so it would be something that's pretty far away. And what I learned, this is from Dion from the channel Dion Talk Financial Freedom. He says that the best market is where you have boots on the ground, right? Is that what he said, or will you know someone that lives in that
Yeah,
market at least?
yeah. If I wasn't moving to Hammond and moving to Hammond, I know a bunch of real estate investors up there,
Mhm.
so I can already bounce. I forgot about that component, but
Yeah.
absolutely, someone's already done all the hard work for you. Not
Hmm.
all of it, but
Yeah.
a lot of the initial like going through and looking and analyzing 60, 70 properties isn't going to tell you as much as going and having a beer or cigar or coffee or whatever with
With
four
someone
or
that
five
lives there.
local.
Yeah.
Yeah, exactly. You're going to get a lot more useful data. But but if you're looking at potentially a smaller town,
Hmm.
sometimes investors won't be forthcoming or accurate with what they tell you because they're trying to protect their territory.
Hmm. Okay.
Especially if they've got one or two houses, they're probably not going to worry about you. But
Yeah.
one of the areas I'm looking at, guy has 30 or 40 properties in the not in Hammond, it's another city. I think he's in Baton Rouge, but those properties all have a bunch of units, and so
Mhm.
all the stuff I would be looking at is the same size as the stuff he's looking at, and
Yeah.
so I don't know if he would tell me exactly how well or
Mhm.
how things are, so.
Well, you could find someone that's not a real estate investor, right? Someone that's
Sure.
just someone that maybe a buddy from high school, or from a previous coworker or something like that.
Yeah. and
right?
ask them, hey, how easy is it to find a rental? What are the rates? Get a
Yeah,
real
and
feeling
what are
for
the areas like?
houses.
Where do you
Yeah.
get shot when you walk around? You know, things like that.
Oh yeah, I had one building I was looking at pre Hurricane Ida, so pre-COVID, and I pulled it into this neighborhood because I had found, and I was this was a stretch for me at the time. It was like a 55 unit building, and I think it was something like 10 to 14,000 a unit. So I was like, this is really inexpensive.
Mhm.
Probably not a great area. So as I'm driving through, I'm driving around the apartment building a bunch, looking around. I would roll my window down and talk with neighbors and say, "Hey, how's the neighborhood?" and all that stuff. And at one point, a police officer pulled up next to me, and he goes, "Yeah, so why are you driving around here?" And I was like, "Oh, I'm a real estate investor. I was looking at building, and I'm looking at that one right there." And he goes, "Okay, well, just so you know, we're there about maybe once every 6 months to clean up a body."
Oh, sure.
Because it's like a drive by. And I'm like, whoa.
That's why you needed to hear.
But at the same time, he said, hey, if you clean that building up, it'll help with a lot of the issues in the neighborhood that we have. So if we could somehow get a landlord who's hands on, he's like, well, the main problem we have right now is when we try to communicate with the landlord, it's some guy who's out of town. No one knows who he is. Whenever you call him, you end up talking with his assistant or his property manager.
Yep.
They don't seem to care. They just run it, So there's opportunity and stuff like that. So at the time, uh, that was one of those deals where I was like, hey, if I sold all my stuff, I could go all in on this one thing. And then if anything goes wrong, I'm instantly bankrupt. So obviously, uh, I like to look at bigger stuff that's out of reach pretty frequently just to kind of, in my mind, play with, hey, could these numbers work? Could I do something like this? Or
Yep.
because I have a buy box where I'm watching that market of stuff over time because at some point that market may soften and those opportunities might be somewhere I can go. But I won't know that if I'm not at least kind of passively looking at them on the side.
Yep.
Um, but I mean, that's how I find new markets. I've always got one or two places I'm mainly focused. And then if the numbers start to not make sense, I
Mhm.
might change asset class from single family to small multi. And then in some cases, it's actually more affordable to go with like the 5 to 10 units that are all
Mhm.
studios than it would be to buy like all 3 bedroom fourplex. Might
Yep.
cost more than like a sixplex. I've seen actually last week I saw a sixplex that was only 380,000. But they're all tiny.
Yeah.
They're all little one bedrooms. So your issue there is you're going to have massive amounts of turnover because people don't stay in studios as long. Typically,
Mhm.
sometimes they do, but you have to think about that sort of stuff. So
Yeah. Yeah, I guess that's something that we missed. Changing an asset class as well. It's a good way to determine if that market would be right for you to invest in as well. Yeah.
yeah, and it's not as intimidating as people think. The main issue you run into is if you end up going commercial, you
Mhm.
don't have access typically. You can sometimes get it to fixed long-term debt. And if
Okay.
it's not fixed long-term debt, it tends to freak me out a little bit.
Yeah,
I've got
that's what I'm scared of
yeah,
as of right now. I've never dabbled in commercial, but I'm sure I will at some point, and then we'll have to cross that bridge when we get there. But yeah.
it's not the worst. It's if anything, it just means you need to be that much more conservative when you look at stuff.
Hmm. Okay.
So
Cool.
I've only got one commercial alone at the moment.
All right. Great. We should have a video about that soon then.
Yeah.
All right. I think that's all we had for how to pick a market. If we missed anything, please leave it in the comments. If you know a little more than us, we appreciate some feedback. You know, just comment what we missed and what other things you would suggest on how to pick a market. If Dion is out there, comment here and let us know what we missed. And that is it for this video. Thank you for watching. Go follow Ned on his channel. It's Ned Talks. He has some good contents. See you
Yeah,
guys
give a
next.
like and subscribe to Radeon. Landlord Odyssey is always, pumping out some great content.
Yeah, appreciate that. All right. See you
Yeah.
guys. Bye.